I guess give us 1 more minute before we kick off. Can you guys see my screen now?
It's a lovely disclaimer.
Thank you. Yes. Cool. It works then. Eugene, can you unmute yourself, or I just ping the team? All right. Give them seconds. All right, cool. So yeah, 2 minutes past 8 Singapore time. I think let's kick off then. But before I officially kick off our DBOE Forum, there are 2 reminders I want to clear. First one is about logistics and admin stuff. To all the audience, if you fancy a chance to receive reward from DBOE, please key in the name on Zoom by your email address. Okay. If you don't, at the end of the day, we have no way to identify you, and it means you won't receive reward at all. And the second one is this disclaimer. I want to pause here for 15 seconds, and audience, make sure you read and understand. If you are not comfortable with this disclaimer, you still can disconnect. All right. So 15 seconds. All right. I'll stop sharing. So good day to all. Welcome to the first edition of DBOE Forum. I'm the host, Vinh Vu, and our guests today, Yujun Lin and Vladimir Barzov. Eugene is not a stranger. He was my boss at Singapore Exchange. He led the product management for the derivative unit, and I was under his team for 6 years. He was not only a manager, but also a mentor and a go-to person when I needed advice. About Vladimir, or Vlad for short, it's dated back a little bit longer. Some of you might know my background. I started as a software developer, a startup founder over a decade ago. After exiting my first startup back in 2010, I joined the financial industry. And the first company I worked for, named RSR, is a hedge fund. And Vlad was the one who interviewed me and brought me in. My financial knowledge was really built up from the lessons I learned from Vlad, and the rest is just history. To kick off our DBOE Forum series, these are the 2 persons I was thinking of first. Enough about me mumbling. Let's hear what they say about themselves. Welcome, Eugene and Vladimir.
Thank you. Vlad, you want to go first?
Vin, thank you for having me on the program. It's a real pleasure to be here and to see that the DBO is picking up. Like you said, we've known each other for many years. Okay, just a quick introduction about myself. I'm a math geek, typical MIT. I joined Wall Street as a quant in a very distant 2006. That makes me much older than most of you guys here on that webinar today. I met Vin in 2010 in RSR Capital. It was a hedge fund specializing in options trading. Had a lot of fun then. And actually, it's around that time that I heard about Bitcoin incidentally. 2011. I didn't think much about it at the time. But I did hear about it a second time. That was in 2013. And that's when I got really interested in it. That was actually the first ATM being installed in Canada. And I realized, wow, this thing hasn't died yet. Maybe it has legs. Maybe there's something there. So that's when I started looking into it, and I fell in love with crypto, and I've been in love ever since. So that's my connection to crypto. And after an intro, I'll leave it to Yujun to say a word.
Okay, thanks, guys. It's good to see you guys again. Vin, yes, it's my pleasure to be here. My pleasure to have worked with you and Vlad before in the past. I really enjoy working with people who are smarter than me. So, you guys are the ones, right? So I also consider myself a geek, but unlike Vlad, I'm terrible at math. Instead, I love all things at a more conceptual level about science, space exploration, like the James Webb Space Telescope, very exciting discoveries there, and even PC games and science fiction. And what I particularly love about science fiction is the philosophy of science fiction. So needless to say, I'm a big Star Trek fan. I don't like Star Wars because it's just space opera. So don't get offended, those of you who like Star Wars. I like Star Trek because of the very clever ideas that they presented, right? So I think, all this science fiction usually seems quite irrelevant to everyday life, but many of the things that are debated today about robotics, AI, in our very high-tech, very hyper-connected society have already been considered by, some legendary authors, right? My favorite ones would be Isaac Asimov, Arthur C. Clarke, R.A. Heinlein, and Philip K. Dick, who wrote this very famous story that was turned into a movie called Blade Runner. It was originally about AI, artificial human beings, and it was called, I think, Do Androids Dream About Electronic Sheep? So very interesting book. If you haven't read it, you should. I work in TradFi today, as Vin introduced, mainly because it pays the bills. But I like to think that my mind and my soul lives on in cyberspace. So that's it about me.
Thanks a lot, guys. Let's start with Eugene. Again, thanks for accepting our invitation. I want to, and I prefer to take full credit here, because by joining us, you seems deeply treasures our personal relationship. And one thing I know for sure that probably I did an excellent job during Ajax time or Singapore Exchange time for you, and no jokes further about that. On a more serious note, apparently there are so many things we can talk about. We have been talking a lot, but I want to cherry pick one to kick off. So you were in the senior positions at Singapore Exchange, and now you are handling a major financial institution. In a nutshell, you see things from the top as far as market concerns. So could you tell us how things are looking from broader investable assets universe, where we are and how we got here?
Thanks for that, Vin. That's a very interesting question. I think it's important for us to remember, go back a few years, right? The 2008 financial crisis. So although that kind of reveals a bit more about my age here.
No, I can't reverse engineer, so no worry.
Yeah, I was hoping you become a billionaire and then you invent a gene back, right? But anyway, so most of you are probably too young to remember the full effects of the 2008 Lehman crisis, right? But I suppose you can think about it as kind of like the COVID of the financial industry. It was a kind of complete lockdown on credit. The streets were empty. People had no jobs. Lots of government stimulus had to come in, and that kept the interest rates extremely low for about 8 years or more after the crisis, right? It was only in the past year or so that we've seen these crazy sky-high interest rates. Now, so during that time of the crisis and just after the crisis, the availability of cheap credit, which is basically free money, drove the equity markets to very inflated valuations that we've seen, right? Because the world was basically hungry for investment returns. There was so much money sloshing around, people were just throwing it at whatever investment came up. The past decade, I think, can be best characterized by the rise of the tech unicorns, which I believe was a phrase coined in 2013, right? 5 years after Lehman, in the midst of this cheap and plentiful credit. And now what we've seen is that the interest rates have basically gone from 0 to 5% in just over a year. And we see that all this cheap credit isn't really free money, right? I mean, we all knew that instinctively, but now we're starting to realize the full effects of it. And I think, it's really because people are starting to realize that the guys that had lent you all that cheap money before now want it back, and they want it back with interest. So it's obvious to me that the very high-profile bankruptcies that we've seen recently, which we'll talk about later, Silicon Valley Bank, and actually more recently WeWork, are just very stark examples of unicorns that have grown fat on kind of like the empty calories of cheap credit, and now they're having a heart attack. So I think that frames where the financial markets are today, right? We're trying to live or get used to what is frankly a normal interest rate regime that was already in place before the financial crisis.
Well, thanks, Eugene, for sharing the market landscape and also setting the stage for us. I can clearly feel the heat of like Web3 and AI nowadays. And by hit, I really means opportunities, right? So Vlad,
just to add to that, right? I think I painted quite a gloomy picture of the whole thing, ending it on the bankruptcies of the tech unicorns. But frankly, if you look at a very long-term trend of human history, right? Technological advancement has been essentially the single most consistent factor that leads to a new system state, if you will, right? So this is on your point about Web 2, Web 3 development. So, if you look at it, going back many years, so even older than I am, from the Stone Age to the Bronze Age to the Iron Age to the Industrial Revolution to powered flight to the Cold War, nuclear arms race to landing on the moon, and now to the Web 2, Web 3 revolution, and actually eventually, I think, the artificial intelligence singularity. I think regardless of the state of the TradFi market today, in credit, in oil, in equities, in fixed income, I think it will be the technological advancement of the human race that pushes us to the next level of existence. So again, a very broad thing and hopefully less pessimistic than what I was saying before.
No, it's not. I guess I don't take it negative or gloomy at all. As I said, I do feel the hit, right? When we talk to like VC, talk to like people in the industry, in the crypto space, we clearly see that, right? So I want to revisit this what you mentioned just now as a later stage. I want to give the stage for Vlad. So Vlad, I still remember during one of the barbecue in 2013 around East Coast area. I'm not sure you remember. I brought one of my friends as well. And I just joined Goldman Sachs after ISR Capital. And during that barbecue, you were talking to me about Bitcoin and also the very first crypto or Bitcoin exchange, Y Commerce. And I still remember it has like lending service and etc. So tell us more, please. How was the market at the time? What set of challenges you faced in great detail, please?
So you're bringing back to 2013, basically, the early days of Bitcoin. I don't remember that barbecue at East Coast Park, but I do remember getting really excited about Bitcoin back then, and I wanted to trade. So I'm a trader. The first thing I want to do is I want to buy it, I want to sell it. I want to try a few of the strategies that I'm used to trading on futures and options. And the first thing I realized is that there is no ecosystem. There was basically nothing. There was Mt. Gox, which is not even a crypto exchange. It was the exchange for, what was that, magic cards, or whatever a magic card is. There was Bitstamp, which was, well, they probably haven't advanced much since then. It was just a couple of exchanges, very poor technology. The only product was basically spot. There was no futures, there was no leverage, there was no way to short Bitcoin. There was no concept of interest on crypto, earning yield or staking. There was basically nothing. Even from a technological perspective, there was no APIs, streaming protocols. I mean, all the things that we, coming from traditional markets, are used to having available were just not there. And I thought, well, maybe that presents an opportunity. If I'm a TradFi guy looking to trade crypto, maybe there's other TradFi guys who want to come and trade crypto. And maybe if I set up that derivatives exchange, which was a novel thing back then, I could be the first one waiting for particular institutional investors coming in because they are the most familiar with futures. So the ecosystem was basically very few people. It was very niche. We used to meet in those coffee shops, meetups. Every once a week somebody would send an email. You subscribe to a mailing list, and then you meet those funny artsy people with the funny hair and evangelists who believe crypto is the future. It's going to replace the financial system. Crypto meant Bitcoin back then. There was only Bitcoin and Litecoin, so only these two. Not even XRP was available, I guess. They really believed crypto is going to be the future. It was very crazy. You could feel the hype, you could feel the hope, you could feel the testosterone in the air. A lot of startups pitching crazy ideas, so mine was one of those crazy ideas, derivatives back then. My competitor at the time was actually Arthur Keys, who set up BitMEX. Great respect for the guy. He did a fantastic job with BitMEX. He really found a way to introduce that product to retail and to make it work. Unfortunately, my exchange, which was known as Economos, was targeting institutional investors. It was primarily a B2B business, and that really didn't take off back then in 2013. The hedge funds, the prop shops, they were watching the space, but they were like, no, it's too novel for us. We're just watching if we want to enter. So I guess the retail angle was the better one. So BitMEX really managed to prove that it can be done, and very successfully so. But yeah, it was crazy time. It was a wild west, even more so than today. Exchanges were just coming up and dying and stealing people's money and telling everyone, oh, that was a hack. Yeah, fun days. It's really nice just to look back and see how things have progressed in many ways, in unexpected ways. Things which I expected to happen did not happen, and things which I never imagined would be there are now a reality. So maybe I can touch upon that at a later point. Hope that gives you an idea of how things were looking at 10 years ago.
I just want to ask you, what kind of coffee shops did you go? Probably they're still around.
I wouldn't remember. Near Mohammed Sultan, some really crafty, funny places. Yeah, it was really niche thing, you know. People really knew each other, if not by name, at least by face. Everybody knew that, oh, this is the guy doing that startup, this is the guy doing payments. Yeah. Very subculture, if you will, like undercurrent.
Yeah, I also joined a number of groups here in Singapore. One which I quite like is Singapore Crypto Builder, organized by a guy named Nick Tong. Right, so they do have like dinners, drinks every 2 weeks, and I think it's really good. It's really good chance opportunities for you to network and talk with builders, not just like developers. So they are like developers come business like or startup founders. So guys, if you are in Singapore, you can look up for Nick Tong on Telegram, or you can just reach out to us. I also want to echo what Vlad mentioned just now. It's like, you know, funny hair guys. I think it's pretty much the same crowd. Maybe it's a fuller circle of life now, because it has gone through 15 years already about that. Yeah, and people, some got more money, some got less money, but more experience to share. So I guess, yeah, it's a fuller circle of life. That's all I say. And I will extend that point later on. So now let's get back to Eugene. I want to develop what you shared earlier about chestnut finance. So we all know it's important to have institutions to onboard it into any new asset, right? And crypto is no exception. And their participants could serve multiple purposes. You know, I can list like 2, which is very obvious. Number 1, it's like a stamp on the asset that this is, you know, like the sophisticated type of investors. They have interest. There is demand, right? So it means market confidence and etc. The second one is for sure the institutions, they do have influence into policy, regulation, and etc. Right? So could you shed some light on, does it really matter that much and why? Yeah.
Okay, thanks. I mean, that's a very interesting question. I think we can start by looking at, you know, I suppose the comparative size of the markets, traditional versus non-traditional assets. So if you look at the crypto market, for example, right, I think it's worth about $1 trillion, with trillion with T, trillion half would be on a good day. And that has, you know, the growth has been phenomenal, right? It's been absolutely amazing. It's gone from 0 to $1 trillion, which is insane. But it's also gone through unprecedented volatility, right? So it's a huge market and also very unpredictable, right? If you look at the TradFi market, now I did some research on this, and the best I could find is that, you know, the TradFi market in terms of assets under management is worth something like $100 trillion. So 2 orders of magnitude bigger than what the crypto market is today, right? Even at its peak, you know, the TradFi of the crypto market, the TradFi TradFi market was still huge, way bigger than the crypto market. And I think it's important to understand this because this money is invested and managed by sovereign wealth funds, pension funds, traditional asset managers. The basically hallowed financial institutions of the world that have been around for many hundreds of years, right? And most of this money and most of these money managers are looking for relatively safe investable assets. That is to say, things with a very good Sharpe ratio, a very good risk-return profile, and a very small maximum drawdown, or very small potential maximum drawdown, right? So some people consider this investment philosophy a little bit boring because you essentially cannot get rich overnight. You need to be very consistent and make profits every year, and then eventually you will get rich, right? But only through regular and safe investing. So the point I'm making here is really this: the institutional money, it may not move the fastest, but when it moves, it has almost unstoppable momentum, right? The weight of all that regulation in the TradFi market is the due diligence, the investment committees, the fund mandates. These are things that, again, sound very boring, but are absolutely necessary, right, in order to safeguard the monies of the investors. And I think this, because there's so much due diligence and so much work that goes around it, it has this momentum that somehow compounds the network effect of growing adoption, right? So to put it in simple terms, is really that once the institutions start plugging in, then they will bring the next level of legitimacy and the next level of scale to any new asset class, right? Whether it's crypto, digital assets, or NFTs, or whatever Web3 will come up with in the future.
You mentioned about boring, but for me, I think this is good and pretty much needed boredom, especially for crypto, right? Because what I envision here is with institution on board into, let's say, Bitcoin, ETH, there will be higher market confidence for sure, and that will generate some compounding effect. And recently we heard a lot about the Bitcoin spot ETF in the US, right? And ETF is typical traditional financial products, and with such products, the prospect here is our parent and our grandparents' generation. They can proudly and confidently have some crypto exposures. They still don't really need to touch like wallet management, private key, seed phrase, and etc. And then it will basically expand the distribution or the demand for crypto in general. And then more things will follow, like risk management, futures and options, borrowing and lending, and etc. But I want to take a step back and ask you a fundamental questions about ETF. Like, how does that ETF in general? How does that work, and what exactly the benefits it will bring into the ecosystem as a whole? Yeah.
Okay. So again, I'm a big history guy, and like all old people, I like to talk about the past. So let's talk about when ETFs were first invented, right? And I think the purpose for which they were first invented is really to allow people to easily invest in the stock market, right? And in a very systematic, in a passive way, meaning that you're not putting your money and your trust in a fund manager who thinks that he's cleverer than everybody else and trying to pick stocks. You're just putting it in the broad performance of the stock market, right? So basically an index fund that's listed on the exchange. And when we talk about the Bitcoin ETF, it's actually a little bit different because I don't think it will hold such a diversified portfolio. It is more to give access, like you said, right, to the moms and pops of the world, to allow them to plug in without having to mess around with private keys and stuff like that. So I think, it's slightly different to the traditional ETF, but it shares a lot of the main features, which will be, firstly, ETFs are listed on regulated venues, so the big stock exchanges of the world, which means that there are laws and regulations to protect the investor. Two, the ETFs themselves are regulated by the authorities. Three, like what I mentioned earlier, ETFs kind of plug and play into the traditional financial ecosystem. So what this means is that they can really drive the mass adoption of whatever asset class they they represent, right? And I think fourthly, fifthly, and so on, ETFs are also generally low cost, and yes, they can help non-digital natives get involved in certain assets that would otherwise be very difficult for them to access, right? So I think the market generally sees the listing of a new ETF on a new asset class as a sign that the asset is going mainstream. So this will, of course, put some upward pressure and expectations on the underlying asset price. In this case, I think Bitcoin, which I think is also what we've been seeing in the past few weeks, right? At the same time, the actual listing of this ETF, it hasn't been listed yet, I think, right? But if and when it gets listed, I think it will bring new inflows from the TradFi industry, potentially, because it is essentially a plug-and-play product for them, right? It's within their fund mandate, probably. They're able to access it quite easily. But I think at this point, I should say that we need to keep in mind that this is still subject to overall market sentiment. If people don't like Bitcoin, they don't believe in Bitcoin, then they still won't buy, right? So just because it's available doesn't mean that you'll be bought. I know this sounds, again, very boring to many of you and actually us who are digital natives, right? But perhaps the most important lesson I learned in the past 20 years of my career in the TradFi industry is to always maintain what I would call a very healthy skepticism about the sustainability of market trends.
I think it's beyond my brain already, but I think again it's another very good boredom, I would say, because the whole market, crypto guys especially, they're really fantasizing for that coming. We're all waiting for that moment. Bitcoin spot ETF. Yeah, and I think just clarify a little bit. There are some Bitcoin spot ETF in some small countries in the world, but it doesn't really change the story. I think, but the one coming from the US or not, it is a leading, right? Okay, so back to Vlad. Okay, before
this we're talking about ancient history, right? Yeah.
Yeah.
So let's talk to the guy who was there from day one.
Right. Yes. So yeah, 2013. That's what we heard since the beginning until now. So it's quite more than 10, 11 years already. We want to hear from you the landscape, right? The evolution or the change of the landscape. Can you please share with us?
From the original crypto dinosaur.
Yeah,
right?
I mean, I could term it as like before BC, right? So it's like 2,000 years ago until now for Bitcoin.
Not at all. It's only 10 years ago. But basically, back then, all we had was the Bitcoin Manifesto, the Satoshi Nakamoto white paper that promised a new way of reaching consensus without having to trust a single party. That was the revolutionary part about it. And it promised to replace money in 3 fundamental ways. So money is being used for payments. That's the first thing that comes to mind. You use money to buy something in the shop. For transfers, you transfer capital from place A to place B, from person A to person B. And for storage of value, you keep money for future use, hoping that it will retain its value. You could keep money, you could keep bonds, you could keep gold. There are many assets that you could keep that serve the purpose of storage of value. And crypto was supposed to help with all of those. If it's to replace money, then obviously it has to help us effect better payments, particularly micro payments, because credit cards who dominate that space charge very high fixed fee, which is particularly high for small payments. And there's many small enterprises that don't have bank accounts, but they all had a cell phone, even back in 2013. You may not have a point-of-sale device, but you have a phone. So crypto really had the promise to replace credit cards, to replace payments. And looking back, that hasn't happened. Crypto had a promise to replace money in the form of storage of value. That hasn't happened in part because of the extreme volatility Crypto goes up, crypto goes down. I've seen 3 winters. Yes, crypto always comes back strong, but you know, do you really have the stomach for all these ups and downs? Not if you're really looking to store value, right? So gold, which has a lot lesser volatility, is much more acceptable means of storing value and riding out inflation than crypto, which is just too volatile, right? And transfers, that's probably the only area where crypto has made an advance. Crypto, especially Bitcoin, is still being used, unfortunately, in ways that circumnavigate existing laws, probably because why wouldn't you be making a bank wire if that was legal? So the major promises of crypto, basically, as per the white paper of Satoshi Nakamoto, were not met. Back in 2013, the hardest thing for startups was to access fiat, the on-ramp, off-ramp. Banks would shun startups, would not want to open bank accounts for them. That continues to be a problem 10 years later, you know, with the fall of, was it Silvergate and Signature Bank, which were major access for the crypto world into the financial system. Now that's gone again. So we're back into the same problems of 2013. It feels like the biggest promises were not fulfilled. And at the same time, many other things happened that I couldn't have foreseen. Back in then, nobody knew about Ethereum. Ethereum came about 2014, 2015, having an entire virtual machine running in the cloud, you being able to execute an arbitrarily complex code in a decentralized fashion. That's unthinkable. So Bitcoin was just a number, balance that I can transfer. I have 5 Bitcoins, I can transfer 2 of them. Ethereum allows you to do so much more. Smart contracts, right? You can set up your will. You can build a video game on the blockchain. You can do pretty much anything that you can do with code. So it's a tremendous opportunity. So crypto has really evolved in a totally different direction than what we expected back in 2013. The whole DeFi world, smart contracts, and building the existing world in the cloud. That's that I couldn't have foreseen. I couldn't foresee the ICO, the rise and fall of ICOs, the NFTs. So Bitcoin really shoot off in very unexpected direction. It's really interesting to look back and see that the original promises are still in wait, but crypto has evolved in spectacular ways that I couldn't have foreseen. It just keeps reinventing itself.
Thanks, Vlad. I want to cherry pick again. You mentioned about volatility of Bitcoin, hence the high volatility, hence it cannot deliver the very first use case of Bitcoin. Right? Yeah. So I want to talk more about volatility here. And I think we all know crypto is volatile and market is full of uncertainties for the past more than 10 years. But to put things in perspective, like TradFi and Chestnut Finance and crypto. So what kind of volatility figures we are talking about here? Let's say S&P and then Bitcoin, and then
well, even now Bitcoin is a lot more volatile than S&P. If you compare VIX, which is like what 16-17% recently, versus Bitcoin, which is 50-60 on a good day. And Bitcoin is like the lowest volatility among all the coins. All other coins are pretty much more volatile than Bitcoin. So crypto is still way more volatile. So this is a hindrance for the original promises of payment, storage, and transfers. Not so much transfers because you don't really hold on to the assets for too long. But for payments, for sure. I wouldn't want to receive payments if it's going to be very volatile. So volatility is here to stay. I wouldn't be able to tell you whether Bitcoin is going to be up or down next year. 10 years ago, I didn't know it's going to go to 37,000 today. It was $100 back then, and that seemed like a lot for a crypto asset, right? So I can promise you, though, it's going to go through ups, it's going to go through downs, but it's always going to be there. Crypto is not going anywhere. And you're going to have to ride a lot of volatility. Now, volatility could be something scary, or it could be an opportunity. Just like, driving a car. If you don't know how to drive, it's a risk. You may crash. But if you do know how to drive, it's a very useful thing. So you may choose to embrace volatility and trade that as an asset class in itself. Okay, I'm talking my book because I'm an options trader. I love options, but that's what options are. Options are one of the ways to access basically volatility as an asset class in itself. So yeah, you can embrace that as opportunity, but like a driver's license, you got to learn how to drive first. You want to educate yourself first what you're doing, so that you don't crash. Right? So some education is in order if you really want to dabble in options, which I mean, I'm very partial to options. It's a fantastic space. I love options, but it's not for everyone. So yeah, you got to put up an even bigger disclaimer there that people need to know what they're doing and not just jump blindly into it.
Sure. Yeah. And
I
thanks
thought
for.
I thought it was us TradFi guys that love the disclaimers, right?
Well, I've done my bit. You've been warned.
Yeah, so thanks for mentioning option. I know it's our bread and butter. In a sense, it's also my bread and butter as well. And the good thing here is I don't have to plug DBOE in, because DBOE is about crypto option. But I think the things about option is it's a very niche market, right? I think education is very important. I think nowadays, if we talk to the youth, maybe they understand stock trading and maybe a little bit about futures, but option is still something not very popular, right? And education is a key, and is very important to really bring the adoption and acceptance. I just want to plug in a little bit about what DBOE is doing. So that's why DBOE, we spend a lot of effort in educating the youth or the crypto users, because majority of crypto users, they understand about crypto, they understand about key management and etc. But when it comes to financial products, I mean, they know swap, right? They know spot, but majority of them, like futures and option is still a distant concept. So we spend a lot of effort in educating them. We went to university, setting up booth and webinars, and also to the audience, we are having online webinars, like teaching about option, online drill with our trainers. I think it's coming up soon, so please watch out. I also want to extend a little bit further, Vlad. So back in 2013, there's no smart contract concept, as you just mentioned. And Ethereum, as you said, it came out around, I think, around 2015, right? So a hypothetical question to you. Would you start a DEX if you got into crypto and blockchain a few years later? Do you think you get into the space too early? And what's your view about DEX and STEX, DeFi and CeFi?
So decentralized finance did not exist back then. Like I said, it was not a known thing. Even centralized finance, we didn't really think of it as such. Like I said, the exchanges were, Mt. Gox was an exchange for magic cards. But they were very important. The centralized exchanges were important because they popularized crypto. They made it available to everyone. Everyone could basically open an account with a centralized exchange, could put a few $100 and start trading. And they don't need to know what crypto is. They could be trading magic cards just like they're trading crypto. So CeFi really served that great purpose of making crypto available, popularizing it to various crowds, to speculators. They put it on the radar of institutional investors, and so on. So CeFi had its time and place, but it really goes against the very grain of what crypto is about. Crypto is about not having to trust one party with your money. That's what the white paper is about. That you have to trust, as long as you can trust the majority of a system, you don't have to trust anyone individually. So putting your money with a centralized exchange and trusting one guy, the CEO, who always has the keys to the accounts, to not run away with your money, really goes against the very grain of what crypto is about. Okay, so Mt. Gox blew up in 2014. It was a criminal case. The CEO basically stole the money. He went to jail for that. So you would expect that people have learned, but 2022, FTX, one of the largest exchanges, fantastic product, very good system, very good technology, and same thing. One corrupt person that you have entrusted all your assets to decides to take you away from you, and now he's going to jail for that, right? There was an indictment recently. So time and again, CeFi proves that it cannot be trusted, and it validates the very point of crypto, that decentralized protocols are much more secure. That's why you don't have to trust any one particular person. So the native world of crypto is DeFi, the way we know it. Smart contracts. If a smart contract can be audited, then it's always going to do what the code tells it to do. It's not up to some person who want to take your money. So I'm much more bullish long term on DeFi. I think crypto has really legs in the DeFi world, but CeFi is going to continue serving a very important purpose. There will be exchanges coming and going. There will be booms and busts. There will be fiascos like 2014 Mt. Gox, 2022 FTX, and that'll be the next one as well. Because people never learn. Probably those who got burned 10 years ago, they're no longer there at FTX. It's a new generation who get burned. But yeah, I'm bullish on DeFi and DEX in particular. DEX, which means decentralized exchange.
Thanks for sharing the conviction, and that's the exact reason why we at DBOE, we started DBOE, and we want to promote DBOE to more and more people. And I think it's very meaningful for us to hear from you, as I consider you as a crypto dinosaur or like OG in the crypto space, very early adopter. Yeah, so I think it means a lot for us. I want to get back to Eugene, and also want to check a little bit about mentioning Singapore Exchange. This is where I share the time with Eugene for quite some time, right? So we know Singapore Exchange or SGX have a long and rich history. Just for the audience information, in 1986, SGX pioneered the very first futures on the Japan equity market, right? Even ahead of the Japan's exchange counterpart. And in 1984, I think SGX, in collaboration with CME, they launched something like the very first form of 24-hour futures trading. The term for that is MOS, Mutual Offset System. I'm sure Eugene can talk a lot more, but I can talk a lot more as well. But basically, it's the very first form of 24-hour futures trading format. Traders in the US, they can continue by transfer their position into SGX and vice versa if they really want. So it's really like form round the clock trading cycle. So the questions I want to ask Eugene coming from, so DBOE is an exchange. We are not a centralized exchange, but we are decentralized. But I think the functionality wise, we are an exchange, right? So what could be the number one lesson for us to learn?
Wow. Okay, that's actually quite a very complex thing, but maybe three things, right? So first, actually, I wanted to address what Vlad has said earlier about CeFi and DeFi. I think I take a very balanced view about this, because the power of centralizing liquidity cannot be underestimated, right? Or rather, cannot be overestimated. It's like putting your listing on Amazon.com. Right, for your product, you can instantly access probably 1 billion clients, which is why Facebook continues to persist, Twitter continues to persist, despite all the funny things that have been going on with Twitter in the past few months since the acquisition. So centralization of liquidity, the momentum that the existing community and existing network has is frankly almost unstoppable. Right, so there is something to be said for centralization, but of course the question is, do you trust that central authority, right? Do you trust Elon Musk? Do you trust Jeff Bezos, right? And I want to be balanced about this, because yes, I do agree that decentralization is great because it gives power and control back to the individual consumer, right? People like you and me. But at the same time, some aspects will always be centralized. So other than liquidity, for example, you need somebody to code your wallet, right? You need to trust the people who coded the network. You need to trust people who are auditing the DeFi network, right? So there are layers of trust that cannot be removed. There will always have some element of centralization. But overall, I think the principle of decentralization is important to remember as we go forward, right? So that's my take on DeFi versus CeFi. Let's go back to SGX, which is I can talk about it forever because I spent 15 years there. First, I would say what you mentioned about the mosque, right? So I also want to tie this back to what I said earlier about technology driving progress, right? From the Stone Age to Industrial Revolution to today. And you know, frankly, it doesn't have to be complex technology, right? The mutual offset system that you mentioned, believe it or not, was actually a huge step change back in the day, right? So you can picture this. In 1980s, people were still trading face-to-face, like in person, right? They were standing in a big circle, essentially shouting at each other for 8 hours a day, right? And so you can only do this physically for so long before you fall over, you know, from exhaustion. And so the CME and the SGX at the time had a brilliant idea, right? Because the American time zone and the Singapore time zone are exactly 12 hours apart. So they said that, you know, we can trade in Chicago, and then at the end of the day, we'll compile a file, or we'll put it into a CSV format, we'll send it to Singapore, and then a fresh set of traders can pick up that file and continue trading, right? That's essentially what it is. At the end of the Singapore day, you make another CSV file, you send it back to Chicago, right? And that was revolutionary, right? You cannot imagine that CSV files will revolutionize anything, but it revolutionized the futures market because it created the world's first 24-hour market, right? And that is technology. That is a practical application of technology in the real world that actually worked out. So it, you know, technology will drive progress, and it doesn't have to be some crazy innovation, right? It can be very, very simple. So that's the first lesson I would say, right? Technology will be the future. It always has been and it always will be. Lesson number 2, I would say, would be that in the TradFi markets, particularly, you know, with Singapore Exchange and the amount of effort we put into building the reputation and the trust of the centralized exchange, is really this, right? We hit upon a formula that boring is good, because boring is profitable, boring is consistent, boring is safe, right? If you look at what Vlad had mentioned earlier, the bank failures recently, and what I had also mentioned, WeWork, you know, these things were all very individually very exciting until they suddenly were not, right? Until they went bankrupt and blew up. FTX, like you had mentioned, Vlad, was exciting until you know it fell over, right? So I think boring, safe returns, as a general principle, right, is profitable in the long run. And this is what, you know, I think when you talk about institutions, that's what they're looking for, right? Boring is good. And because boring is scalable and boring is easy to implement and to explain to your investors, right? So sending a CSV file is boring, but it's also very, very effective.
Well, I guess the key takeaway for me from, you know, your speech is, yeah, boring is good, and that exactly, in a sense, we encapsulate that in our DBOE option. It's fully funded. It's zero counterparty risk. Yeah, that's my takeaway.
Okay.
Sorry to interrupt you.
No, it's fine. It's fine. I'll take a break from all the ranting anyway. So I think, you know, to round up what I've said today, it's really about, you know, maintaining that healthy skepticism, but actually it's about the balance, right? The balance between CFI and DeFi, the balance between risk and return. And I think, you know, in this age of social media, there's always a lot of hype about new trends, and there'll be guys that come up to you and promise like 1,000,000% return on your investment. So obviously avoid those guys, right? But what I would say is that we should pay attention to the guys who kind of humbly and quietly go about their business, trying to build a better product, trying to build a better service. And I think these are the guys that will actually change the world for the better. So, you know, the boring guys, basically.
I wouldn't think we are a boring team, but yes, at DBOE, we live by that philosophy. I personally often told my network and my friends, yeah, those who claim, firstly, guarantee a return, that is a red flag, right? For sure, it's yeah, it's too good to be true. And not to mention, it's like 1,000,000% return. In a professional world, when we talk about investment, it's always come with risk and return, right? And it might end up just risk or loss. And this is, I always share with my investor that this is an investment, right? We can't promise anything. And it's the same to the DBOE investors. And to our users, we, as I mentioned earlier, we spend a lot of effort in educating them, making sure they understand the risk. And for sure, as an exchange, we also make sure that it's a non-custodial, meaning the position is in the wallet. So there's no FTX-like risk at all with DBOE. Yeah, so we pretty much want to really enhance our offering and services so that they stay with us. Right? It's not about like promising huge return and etc. That is our approach. I guess I think we are running out of time, so I want to end with a slightly different topic. But Christmas is coming, so I just want to ask you guys: any plan for Christmas? Any plan for a drink among us?
Yeah, absolutely. We should grab a drink. Glad you're still muted though. Moderator really doesn't like you. Or doesn't want you to join our drinks. Yeah.
I have no power over the audio. As for Christmas, well, school holidays are coming here in Singapore, so I guess spending time with the kids, watching over my crypto portfolio, and if Santa Claus reads my letter, maybe my portfolio will do well over Christmas. Let's see if I've been a good boy.
Well, I've stopped looking at my crypto portfolio, right? So I think we live in pretty crazy times today. So Christmas is coming. It's supposed to be a happy season. I think with the high inflation, with the political unrest everywhere, I just hope I have a very boring wish, right, for Santa, which is I hope that the holiday season will be more peaceful and everybody out there stays safe and healthy. I don't think I can wish for anything else in good conscience. But anyway, so Vin, what does a crypto founder wish for at Christmas? Just remember, if you wish to be a billionaire and it comes true, remember your friends in TradFi, all right?
Yes. That's a given, boss. Wow, interesting questions. You guys know I socially celebrate Christmas, and this year I am planning or working towards even a bigger event. So Christmas come crypto summer. I really hope crypto summer is coming around the same time with Christmas. And by crypto summer, I mean
crypto summer in the winter.
Say again.
Crypto summer in the winter.
Wow, in Singapore it's always summer, right?
It's always the summer, yeah.
Yeah, yes. And with global warming, I think we're probably fine.
Yes. Yeah, so crypto summers, Bitcoin spot ETF is approved, and then regulation be friendly, or there's something about regulation to really legalize crypto. I really wish for that. Maybe contrary to what
it's pretty much legal. It's not illegal, but
yeah,
but yeah, I agree. We need a proper framework that people can trust in trading. So that's a good thing.
And with more institutions onboarding, I'm sure DeFi right now is in a good spot because it's getting attention from like retailers and institutions. So I think DBOE is in a very good position to take full advantage of the timing and also this market situation. So let's close off our first event today. Big thanks to Yujun and Vladimir. We look forward to seeing you again and around. Have a great evening, everyone.
Thanks for having us, Ben. Pleasure being on the program.
Okay, my friend.
Bye-bye.